Welcome back guys to the channel. So today we are doing a special video, and this is going to be about trading with a small account. For anyone who has a small account and you wish to grow your account into a big profitable account, this video is for you. And for those who have already achieved your bigger balance accounts, you can just stay tuned to just have a little bit of this insight too. So without wasting any time, let's jump right into it, guys. So we've listed some of the key points that can help you on your journey to those good big account, from growing your small account into a big account. So let's start right away with our number one pick, which is going to be risk management. So anyone with a small account, for example, we are going to be doing these examples on NASDAQ or any other currency, but these are simple examples that will apply on any currency or instrument or stock you want to trade. These are the basics of trading the financial markets. So number one is going to be risk management, because as long as you're in the market trading, you're always going to have to protect your capital. So number one is going to be always risk management. So what do I mean by this? For example, you want to open a long position at the break of this downward trend. So you open a long position right here. Risk management, for example, you want to target somewhere between the supply zone right there. You want to target something like this. You want to target there, so your target is somewhere here. Look at the risk management. The risk to reward ratio is 0.6, so it's very less. It means if your stop loss is going to be somewhere here, you better target something like 1 to 2. Your target should be around somewhere there. So if you can't make this target, or if all your targets don't reach there, it means this setup is not good for you. This opportunity is not good for your setup. Something is still missing. Maybe there is a retest that needs to be done. There is a retracement that you have to wait for, and you target somewhere there. Otherwise, if you're going to trade 1 to 1, you have to really have a very big win ratio to stay in the market for long or even make any profits. So here it means risk management is going to be very important. So a risk to reward ratio that is very good in the market, that will help you stay longer, is going to be 1 to 2. You risk 1 to get 2. Risk of 2 is the most probable risk to reward ratio that will help you stay longer in the market, otherwise even make some profits. If it is below 0, it's going to be really hard for you. Then number 2, a little bit on risk management. For example, if you have a $1,000 account, you have to at least risk 1 to 2% of your account. So this will be $10 to $20. $10 to $20. If you have a $1,000 account, you're on any particular trade, you cannot risk more than 20. Now it means if you open a 0.1 lot size here, you cannot put your stop losses right there, because it means this will call for a take profit which doesn't fit the reality of the positions you're opening. If you're trying to target somewhere like here, your stop loss has to be somewhere like there. If it is not working in this way, it means the setup is not for you guys. So number 2 is going to be position sizing. For this same setup, you cannot open a big position with small capital. So position sizing, depending on the amount of money you have to open the same order. You have a $10,000 account, it is okay to open 1 lot on gold or euro. You have a $1,000 account, you cannot open a 1 lot position. You have to open, for example, something like 0.1. So position sizing is going to be very key. And the next thing is going to be high probability trades. For example, let's look at these setups here. This was a downward trend, and we saw a retracement back to the upward trend. I can see here we had a head and shoulders inverted, and these are created. Let's draw it properly. So we had a head and shoulders right there, and a break and retest. So this was a clear setup for a buy position. Broke and retested above the head and shoulders, inverted head and shoulders, and this was a high probability setup. This was a high probability setup. Right here at the rejection of this retest was a high probability setup with a simple stop loss, and at least this could have been a 2 to 3 or 2 to 4. So where were you targeting on this trade? You were targeting somewhere between, let's see here, you were targeting somewhere here, and you were targeting here. So these 2 points. So what do I mean by targeting those? It means you are going to put your take profit right there, or you are going to put your take profit right there. As you can see, those two supply zones. So if you're entering here, your take profit 1 should have been at least there, or if you're entering here, your take profit should have been at least there. So why are we putting the take profits there? It is the most probable point where the price is going to go. There was a supply zone there, there was a supply zone there, and there was a supply zone right here. So it means we could have put take profit 3 right there. So order number 3 could have easily been this. Order number 3 could have easily been this. So these were the 3 setup. This is a 1 to 2, this is a 1 to 3, this is a 1 to 6. So if you open the position here of 0.1, you close half of the position here, then the 50% that is remaining, you close 25% right here, and the 25% that is remaining, you close it right here. So this is how you set your trade. So position sizing and high probability setups. Now this downward trend creates such a market structure, and it presents an opportunity to the upward, and this is a high probability setup. So what is number 4 we are looking at? Avoiding emotional trades. So when you're trading and you have some external factors that are impacting you emotionally, at least you skip a day and come back when you're fresh. Otherwise, emotions, psychology will come and will be displayed in all your entries, because trading is really a lot of psychology and emotions are needed to be in the market. A lot of emotional control and psychological understanding of yourself. So number 5 is going to be, you have to always keep a journal. We have a separate video about how to maintain your own journal. If you haven't watched it, scroll down in our other videos. We have a very good detailed video about this, and this will help you understand the best way to create your own journal in Excel or Google Sheets or anything, free of charge, no software needed. So number 6 is going to be about the news. You have a smaller account and you're trying to grow it into a big account. There are some things you have to avoid. Not only things you have to do, but things you have to avoid too. So this is going to be one of them. Try to stay away from the economic news release. You've heard of news, CPI, this, NFP and whatsoever. If you have a small account and trying to grow into a big account, don't listen to all these gurus that are telling you try to put a big lot into this economic news release data. It's going to just blow your account at some point, and you erase all the profits you've been collecting for a very long time. So try to stay away from all the news releases, and you trade when the market is clear and fair, because these news cycles will not respect any of the key levels or supports and resistance you imagine and this put before on your charts. They are not going to be respected at all. So number 7 is going to be diversification. The second last is going to be diversification. Don't try to limit yourself to one currency or one commodity, like you're going to trade gold only, or you're going to trade a single currency like GBP. Sometimes people will tell you that it's good, but it is going to work against you most of the time. Try to learn how to analyze all instruments. You can at least take a few currencies, one commodity, one index fund, and try to move around and diversify your portfolio, your knowledge of analysis and fundamentals across different instruments in the market. This will help you become an expert in trading, whereby sometimes you have a bad week on a currency, but you have a good week in index funds. So this will always work on your side. And the last but not least is going to be education. So it's going to be learning. You have to keep learning. It's going to be endless in your journey to profits and your journey to that big account. Is going to be endless. You have to keep learning again and again till you become a professional in the markets. So those were our 8 points that you can help. This can help you, guide you along your journey to profitability and that 100k account. So thanks for watching, guys. If you haven't subscribed, subscribe. We have a lot of videos coming out every day. We have a YouTube live, and we are opening our Telegram channel starting from this week. So anyone who joins is going to be free for a limited time. Join, invite all your trader friends. We are going to be putting good setups there, good orders, 3 to 5 a week, free of charge. Thanks for watching. Keep it up.